And the truth is, that was the best idea 100 years ago, but there's a better idea, which is digital gold.
So you personally hold Bitcoin, and you have Bitcoin on MicroStrategy's balance sheet. What occurred first? I'm assuming you putting Bitcoin into your personal portfolio, correct?
Yeah, I bought Bitcoin first, and then the company followed.
Now, in presenting that to the board and the folks there, was there pushback, or they're like, Michael, what are you talking about? Are you crazy?
You know, I mean, if it was up to me, and it was just up to me, then we would have just went and bought $500 million worth of Bitcoin as fast as we could.
Sure.
But, you know, when you're a public company officer, you're a fiduciary, and you have to consider how you communicate this in a responsible fashion to all the outside shareholders and all the other constituents that are involved. So we went through pretty extensive deliberations, you know, and I explained to the board my thoughts. And obviously, I told them that I had acquired Bitcoin myself, so they need to understand my situation. Then after that, we considered as a team the regulatory issues, the financial issues, the risk issues, the other macroeconomic options, and that was 8 weeks, or I mean, a pretty decent amount of deliberation, a lot of one-on-one meetings, a lot of group meetings, a lot of research. Work that the accountants did, work that the lawyers did, work that the officers did, work that the board did. And after we went through all that work, we actually arrived at a measured strategy. And the strategy was, you know, multi-pronged. First, we announced to the entire marketplace that we're going to pursue a strategy of a combination of stock buybacks and asset investments in order to protect the balance sheet. So we made that known because we wanted everybody that was an existing shareholder to know that we had concerns about inflation, and we felt that we needed to do something. And the two obvious answers are either you invest all the treasury, we had $500 million, you either invest it in the stock, you buy all the stock back, or you invest it in an inflation hedge. And so there's no magic, there's no perfect answer, so we just concluded, well, we'll just do some of both. We split it down the middle. We said $250 million earmarked for stock buyback, $250 million earmarked for the inflation investment. After the market digested that, we moved forward with the strategy, and we said, okay, well, we thought about it, and we looked at every single asset. What we wanted was a safe haven treasury reserve asset that was going to appreciate faster than the rate of monetary expansion. So we looked at real estate, we looked at bonds, we looked at stocks. That none of those things work because they're all fiat instruments, and they're valued based on the cash flows. And if the money supply expands and debases, the cash flows are going to debase as well. So then we went to precious metals, gold and silver, and the truth is that was the best idea 100 years ago, but there's a better idea, which is digital gold. And digital gold is everything that you love about gold and everything you don't, and nothing that you hate about gold. So it's like it's pure pharmaceutical grade gold. And then we looked at every other crypto and we figured out what's the dominant network that's most likely to get the lion's share of support from other investors with similar interest to us. And the conclusion was Bitcoin, because of a commitment to proof of work. And if you decide what you want is a proof of work crypto network, well, then Bitcoin is the largest. And the issue is you got to pass over Ethereum, because Ethereum's transitioning from proof of work to proof of stake. And if you're going to actually put $1 billion on the network, you have to have 3 to 5 years of experience of a stable network. And so I asked me 5 years after Ethereum 2.0 comes out how I feel about it, and I'll have an opinion. But right now, I can't, as a fiduciary, bet on something that's about to go through a massive architectural change. So then you go to the next thing, which is Bitcoin Cash and Satoshi Vision, and they're all like 50, 60, 70 times smaller. Right. So really there wasn't another crypto that was looking like a store of value proof of work, network, there would be a treasury reserve, and that's why Bitcoin was the straightforward. And the next closest thing is gold, and gold just isn't that close a thing, right? So we went ahead and we allocated all $250 million to Bitcoin, and then we announced a tender offer to buy back $250 million worth of the stock at a premium. It was a Dutch auction, so the investors, if they didn't really approve of the Bitcoin strategy because it's new and maybe people just don't, right? We wanted to give them a respectful way to exit at a profit. So we tendered at a profit, and then we waited through the tender period. And at the end of the period, we had about $60 million tendered. So it could have been as much as 250, but it wasn't that much. Most of the shareholders liked the idea.
Right.
I mean, they stuck with us, and the stock traded above the tender offer price within a couple of days once people digested it. And so then we bought back the 60 million worth of stock, and we had 175 million extra. And we modified our treasury policy. We announced to the world that now we weren't going to be limited to 250 million. Once they digested that, we bought some more Bitcoin, and then we put that on the wire. So then we had 425 million worth of Bitcoin. And, the stock traded up and Bitcoin traded up, and eventually we had $1 billion worth of Bitcoin. And then we went to the market and we raised 650 million in debt, and we bought more Bitcoin. And, the stock traded up and Bitcoin traded up again. And so now we have a lot of Bitcoin. And, and the bondholders have their bond, and the stockholders, have their stock, and everybody that didn't like the idea isn't a stockholder anymore, and the people that like the idea are. So we kind of rotated the shareholder base. And as you can see, it's a long-winded answer to your question, because you can't just do it in one move. You have to methodically move through a set of steps in order to make sure that there are no surprises along the way, because everyone deserves to be communicated to.
Sure. And I heard you mention on TV that, look, Apple and Google may be on the way. Do you feel 2021 is going to be the year of this trend that I think that you started? I've interviewed some medium and small businesses who are doing the same. What do you think? Do you think this is the year, given that, look, they're going to print more money? It's coming, right?
Yeah, I think you're going to see a lot more companies putting Bitcoin on their balance sheet. That's why we're doing this conference, because there's a lot of demand. I've got thousands of customers, and a lot of them are coming out of the woodwork asking, how do you do this? Help us, work through the playbook, the regulatory issues, the due diligence issues, the acquisition, the custody, all these things. Make it easy for us. So it's really a popular demand right now. I think that it wasn't on corporations' radars in 2020. In March, people were shaken. After we did it in August, people started noticing. I think that a lot of early movers, and people like Square, right, for example, they started moving, and Stone Ridge, a lot of private companies that I've talked to, they've already moved, and you can see that. But, for the next tranche of public companies, I think you start to see them, they'll trickle out in 2021, and you'll see a bunch. But 2020, over the next 36 months, it'll be a batch, then a double, triple batch, then, what do they say, gradually, then suddenly?
Yeah.
Then quite a lot, right? So I just think you're going to see this growing. I think you'll see high net worth individuals, institutions, the fast money crowd. You know how it works. The fast money investors on Wall Street, they're going to front run the massive insurance companies, the massive publicly traded companies, but they're going to get in there a little bit earlier. And so I think you already see a lot of them, like Ruffin, like Guggenheim, like Skybridge. They're already moving, but you'll see a lot more of that. And then you'll see some good announcements, I think, in 2021 from publicly traded companies. And I think that's going to wake up more people.
Sure.
And they're going to realize something, which is Bitcoin's a monetary network. It's the first thermodynamically sound monetary network, and why wouldn't you want to plug into that thing if it turns your balance sheet into an asset instead of a liability? It's like oxygen mask dropping out from the space above your seat in the airplane. I mean, more and more companies are going to actually start to grab that oxygen mask because it just makes a lot of sense.
I've heard you say you're never going to sell your Bitcoin. So is there any situation that you would find yourself in that you're like, you know what, I'll sell some? Or are you like planning to leave it as an inheritance for your family, things like that?
Let me explain on that. Why would you ever sell an asset in an inflationary environment if it's being priced in fiat currency, which is collapsing in value? For example, if I told you that the dollar is going to be printed and it's going to be debased 10% a year, and if you owned a house, and it was a desirable house, and you wanted to live there the rest of your life, why would you ever sell the house? Because you know it's going up in price 10% a year. And if the interest rate is 3%, you would just hold the house the rest of your life and just refinance the house. And when you need more money, you would borrow against the house because the house is going up. If you owned a football team, and I printed 10% more money, the value of the football team would go up. You're not going to sell the football team. You're going to hold it. And if you need money, you're going to borrow against it. Selling a good asset normally is always a mistake. Warren Buffett's never sold his assets. He held them forever. John Malone held his assets. Pretty much every billionaire that you know of for the past 100 years, they got that way by never selling anything, right? So the trick is you have to find an asset which is not going to be impaired. Right? The reason to sell something is not because you need money. The reason to sell something is because the asset is impaired. And by impaired, I mean like sell the football team because you know no one will ever watch football ever again. Or sell the ranch in California because you know that they're going to pass a 5% a year property tax on California and you need to leave California and no one's going to want to ever go to that ranch. And sell it because it's impaired. If it's not impaired, then then as fiat gets printed, the asset is going to go up in value if it's a high quality asset. And if you were to sell it, you would get hit with a capital gains tax, either long-term or short-term, right?
Yep.
Capital gains tax is likely to go up next year, right? I mean, it's 25 to 50%, depending on where you're living.
Sure.
So, so you sell something, you're going to pay half of it to the federal government or the state government. You keep the other half, and then you're going to lose the appreciation on the asset. If Bitcoin was going up 20% a year, right, and you sold it, you would lose a 20% return every year for a decade, right? That means selling $1 million of Bitcoin will cost you $10 million in 10 years. So you lose the capital appreciation, you pay the tax,
right.
You get $500,000 to spend. Why wouldn't you just borrow $500,000?